Hello, this is Mike with netpicks.com. In this video, I thought I would take a few minutes to walk you through a couple of trades that we took during the month of June using USO, which is the United States Oil Fund. It's an ETF that closely tracks the price of crude oil futures. So we all know during the month of June that the crisis over in Iraq started to kick back up again. And as a result, energy prices were all over the board. Okay, we saw nice moves both up and down over the past 4 to 6 weeks. Now, when we start to talk about energy, most people think that in order to take advantage of those price movements, you have to trade the futures market, whether that be crude oil futures or natural gas futures. And it's not the case. The issue that I have with trading the futures markets for any length of time, crude oil futures, it's a big contract. It can tie up a lot of capital, and for most retail traders, myself included, I'm just not comfortable with that type of risk. Okay, I don't want to have that type of capital on the line for any length of time. But I still want to take advantage of the big movements back and forth in the energy markets. So what I like to do, and what most of my options mastery students like to do, is to use a product like USO. We do not trade the shares of stock. We actually take it a step further and we trade the call and put options. Okay, we've talked a lot lately about using the headlines, using the news globally that are affecting the markets to your advantage. Okay, so when we start to see the financial names, the banks heat up, well, let's start to use call and put options to benefit from the news that's affecting that segment of the market. In this case, we're talking energy. Okay, we already mentioned we don't want to mess with the futures markets. We don't want to tie up the capital. So when we take a look at USO here, we're still able to get in and profit from the movement back and forth in energy, but we're able to do so for a fraction of the cost and a fraction of the risk, which you'll see over the next few minutes. So this chart, we are using our PTU active swing trader system. Okay, it's our combination of proprietary indicators that identifies both entry and exit points for us before we ever enter the trade. Okay, so now we can easily take the headlines, we can take the global events that are affecting the markets, we can load up a chart and know exactly where we're getting in and where we're getting out. We're not guessing. We're not placing a trade, fingers crossed, throwing our bet down on the table and hoping it works out. So looking at the chart here, this is not a time-based chart. This is not a daily chart, it's not an hourly chart like many of you are used to. This is what's known as a range chart. And what a range chart does, this is a range chart of 28 cents on USO, meaning for every 28 cents from high to low, it's going to print a candle, or a bar in this case. So when I click on any one of these bars on this chart, you'll notice in my data window over here, the difference between high and low is always going to be 28 cents. It has nothing to do with time. That movement of 28 cents, it could take 2 minutes, it could take 2 hours, it could take 2 days. It all depends on how active the market is. So what a range chart does, in a lot of cases, you're going to see nice swings back and forth. It's not perfect, but it will eliminate a lot of the choppy stretches because we're not forced to print bars or candles based on a set amount of time. We all know that certain markets will get slow. They'll get choppy from time to time where there's not a whole lot going on. Well, during those choppy stretches, the time-based chart is going to continue to post candles or post bars to that chart. Well, that's not the case on a range-based chart, which is incredibly powerful. It puts the odds in our favor. So when we came in and we looked at USO, let's go back and take a look at the trades during the month of June. And let's start out with this long trade back on June 3rd. The trade set up on June 3rd. It didn't trigger in until the next morning. Okay, so we had plenty of time to evaluate the trade. We came in the morning of the 4th and we actually triggered in. Notice this tool here. Let me go ahead and turn some of these indicators off so you can see it clearly. Notice our calculator identified the setup for us. Our plus sign right here, that was our entry point. The green dots above, those were our targets. The red dot below, that was our stop. So when I came in, I saw the headlines. Okay, we knew energy was in the news. We knew crude oil was in the news. I was able to quickly load up a chart and I knew exactly where I was going to buy. It was not coming in and placing a trade hoping for the best. It was knowing this was my exact entry point. These were my exact targets. This was my exact stop. So I knew my risk and I was able to place my trade accordingly. Okay, I wasn't stuck spending hours doing research trying to identify the best place to get in. All of the hard lifting was done for me. So when I came up and hit this entry point, remember, we want to identify a trade and we want to take a trade with little risk, with little capital. So I went in and I looked at the June 37 call option, and it was trading for $1.05. So what that did, when I bought the June 37 call, that gave me control of 100 shares of USO at $37 a share, and I paid $105 per contract for that position. Now, almost immediately after getting in, the trade started to pull back on me. Notice it started to go against me, and I took some heat here. Okay, I was underwater. If I didn't have my system in place with my stop shown by the red dots here, well, I was probably leaning towards jumping out at this point. But because I had the system there outlining the trade for me, I was able to hang in there. We hadn't hit my stop yet, and fortunately for us, price action flipped right back to the upside, and we made a pretty steady trek up towards that second target. And we ended up hitting that second target on the 12th of June. Okay, so full target reached. I booked $78 of profit. I sold out of my position for $1.83. So I took $105 of risk. That was my worst case loss. If the trade worked against me and it went down and hit the stop, the most I could lose on this trade would be $105. Okay, in this case, fortunately for me, we went up, hit full target. I booked a $78 profit, which at first glance doesn't seem like a lot, but it's a 74% return. Okay, now we're talking about $105 of risk. If you're trading a larger account size, nothing says you can't come in and place this trade with 20 contracts, 50 contracts, 100 contracts. All depends on your account size. The nice part about trading options with the products that we look at, like USO or some of the other index ETFs or stocks like Apple or Google, they're very liquid. We can place trades as large or as small as we'd like to. Okay, it gives you a lot of flexibility. So a 74% return on my capital in a handful of days, really nice move to the upside. Now we went into the end of the month. Okay, we went into the end of the month, we reached the 27th of June, and I ended up getting a short setup. Okay, so the news out of Iraq a lot of traders started to ignore the news coming out. The conflict did not escalate like anticipated, and the price of crude started to drop. Okay, so we got a short setup. Well, instead of shorting the shares of USO, or instead of going in and tying up all the capital trading the futures contract, I went in and I bought some put options here. The system, again, my calculator gave me my exact entry point, my exact targets, my exact stop. So before I ever got into the trade, everything was outlined for me. So in this case, I went in and I bought the July 39.5 put for $1.02. So $102 per contract gave me control of 100 shares of USO at $39.50. So as long as USO moved to the downside, my put option was going to increase in value, which is exactly what happened. So we got into this trade much like the first trade that we talked through. We triggered short and it immediately pulled back on us. Okay, took a little bit of heat. If I did not have my system in place, if I did not have my calculator identifying the trades for me, there's probably some panic going on in here on this little pullback. It wasn't the case for me because my stop was already outlined for me. Well, the stop was not hit. We turned back to the downside and it made us pretty steady move down to the second target. Now, what is this first target here for? We don't actually exit anything at the first target. We just use that as a money management level. Notice that once we hit the first target, the stop was moved from our full stop down to break even. Okay, everything was done for us in real time. Okay, there was no manual adjustments that needed to be made there. We didn't have to make any advanced calculations. The calculator is doing that for us. As we continue to move down towards that full target, notice we initiated a trailing stop as well. And this blue line moving across the chart here, this is what's known as our signal line. And as we started to move closer to the second target, we started to trail our signal line. So that's a great position to be in because as we move down into profit, we're locking in profit as we go. Okay, now fortunately our stop was never hit there and we hit our full second target. We exited the trade. I sold out of my put options for $1.86. That gave me $84 of profit. That's an 82% return on my investment. Okay, now this trade, it triggered in on the 30th of June. We carried it into July. Okay, and we just closed out of this trade on the 10th. Okay, so in just a couple of weeks, an 82% return on my money. Okay, again, $84 doesn't seem like a home run trade. That's a pretty darn good trade in my book. That's an 82% return. Again, nothing says we can't come in and trade 10, 20, 50 contracts on this. It all depends on your account size. So during the month of June, we took 2 trades, 2 really nice full winners. This is the neat part about this as well. The month of June was great, but what's happened in the months leading up to June? Well, look at this performance report. Okay, this is going back a number of months. Over the past 13 trades, we've won 11. We have 11 winners, 2 losers. It's an 85% win rate. Now, is every month or is every stretch going to be like this? No. I mean, what we're looking for is we want the odds to be in our favor. What I see across many of our products, we try to see a 65% win rate at a minimum. And this profit factor here, we're looking for a minimum profit factor of 2. In this case, it's well over 6. So this is a great profit factor. Just goes to show that our winners are larger than our losers. That's the key formula for success. So if you're newer to options, these are very basic option strategies. These are just buying calls and puts. Okay, you don't have to be a rocket scientist to trade these products. The nice part about trading options, they're extremely flexible. In this case, we talked about taking advantage of the news coming out of the Middle East affecting energy prices to book profits. And we talked about doing so on each one of these trades. We're talking about minimal risk here. We're talking about around $100 per contract. Okay, now we can trade options on commodities. We can trade options on index products, currencies, individual equities. You're not limited in what you're looking at. So regardless of what the news says, if we're seeing news affecting a specific country, a specific commodity, a specific stock, we can take advantage of that news with some basic option strategies. Okay, that's why I love these products. That's why it's the main focus of my trading. Okay, I'm never limited in what I can look at. So if you're not trading options, I would highly recommend that you dig in a little bit deeper so that you can take advantage of these moves. All right, I'm going to wrap this video up here, and I'll be back with you guys here with another video in the next few days.